right. Let's jump into this deep dive you suggested on financial freedom.
Sounds good.
You shared that YouTube video breaking down Robert Kiyosaki's Rich Dad, Poor Dad's cash flow quadrant.
Yeah.
And it's a classic for a reason, right? We're going to break down the key insights from it
Okay.
and how it applies to you as a listener. And it's not about, like, winning the lottery.
Right.
It's about understanding how wealth is really built.
Yeah, it's about thinking differently about money, right?
Yes, sir.
Kiyosaki, he really challenges the traditional ideas of job security and what it means to be financially successful.
Exactly. And he does that right from the start with the cash flow quadrant, that breakdown of the 4 ways people earn income.
Right.
Could you refresh us on those 4 quadrants?
Oh, of course. So we have the E quadrant, which stands for employee.
Okay.
The S quadrant for self-employed or small business owner.
Yep.
B for business owner.
Okay.
And finally, the I quadrant for investor.
Okay. And why is this quadrant system so important? I mean, it's just a way to label different jobs, right?
It's actually much more than that.
Yeah.
Kiyosaki argues that each quadrant represents a different mindset,
Okay.
a different way of thinking about money and income.
Okay.
And that's crucial because your mindset shapes your actions,
Right.
which ultimately determine your financial outcomes.
So it's not just about what you do, but how you think about what you do.
Exactly. Yeah.
That's really interesting. Where do you think most people fall within this quadrant system?
Well, I'd say a large majority of people start out in the E quadrant as employees.
Yeah.
And many strive to reach the S quadrant,
Okay.
Becoming their own bosses.
Right.
But Kiyosaki highlights a crucial point.
Yeah.
Both of these quadrants often involve trading time for money.
So even if you're self-employed, you're still kind of stuck in that same cycle of working for every dollar.
Exactly.
Okay.
You might have more control and flexibility, but you're still limited by the hours you can work.
Right.
And that's why Kiyosaki encourages us to think about moving to the BNI quadrants.
Yeah.
Where income isn't directly tied to your time.
That's where the pipelines come in, right?
Yeah.
That idea of building assets that generate income even while you sleep.
Precisely. Think about the classic story Kiyosaki uses of Ed and Bill, right?
Oh, yeah.
Ed works hard hauling buckets of water while Bill builds a pipeline to bring the water to the village.
Okay.
Ed gets paid for each bucket he hauls, while Bill creates a system that generates income whether he's working or not.
Right.
Yeah.
That's a great way to visualize it. It's not about working harder, but working smarter.
Absolutely. And that's where financial intelligence becomes so important.
Okay.
You need to understand how money works, how to make it work for you. It's like learning the rules of the game before you start playing.
So financial literacy is like your playbook for navigating the world of money. Okay.
And Kiyosaki stresses that it's not something they teach you in school.
Right.
It's something you have to actively seek out and develop.
And that brings us to those 5 levels of investors that Kiyosaki describes. Could you give us a quick rundown of those levels?
Sure. The first level is zero financial intelligence.
Okay.
Where people have nothing to invest.
Right.
They might be living paycheck to paycheck, struggling with debt.
And then it progresses from there.
Yes, it moves to level 2, the savers who are putting money aside, maybe in the savings account, but aren't really actively investing.
Okay.
Level 3 is where you find the I'm too busy investors.
Okay.
They understand the importance of investing, but delegate it to others.
Okay.
Often without fully understanding the risks or strategies involved.
And then things get more interesting at levels 4 and 5.
Yes. Level 4 is the I'm a professional investor.
Okay.
These are individuals who actively manage their own investments, have a good understanding of the market, and are comfortable taking calculated risks.
They're the ones doing their due diligence, researching investments, and making informed decisions, right?
Exactly.
Okay.
And then at the top, level 5, we have the capitalists.
Okay.
This is the level Kiyosaki considers true financial freedom.
Yeah.
Where you're not just investing for yourself, but you're creating opportunities for others, building businesses, and using your wealth to make a positive impact.
It's about moving beyond personal wealth to building a legacy.
Precisely.
Yeah.
And you know, what's interesting is that while Kiyosaki describes these 5 levels, I believe there's a crucial 6th level that often gets overlooked.
Ooh, a 6th level.
Yeah.
I'm intrigued.
Yeah.
What is it?
I call it becoming your own bank.
Okay.
This builds upon Kiyosaki's insight that true wealth comes from understanding and leveraging debt.
Wait, hold on. Isn't debt a bad thing? We're always told to avoid debt like the plague.
That's the conventional wisdom, but Kiyosaki challenges that.
Okay.
He argues that debt can be a powerful tool when used strategically.
Okay.
Think of it this way. When you lend money, you're essentially acting as the bank, right?
Yeah.
You're earning interest on that loan.
So instead of being afraid of debt, we should learn how to use it to our advantage.
Exactly. It's about understanding how to acquire assets that generate income and then using debt to leverage those assets to create a positive cash flow cycle.
So becoming your own bank is about shifting your perspective from being a borrower to becoming a lender, even on a smaller scale.
Precisely.
Ah.
It's about taking control of your finances and understanding how to make money work for you rather than the other way around.
That's a powerful concept.
Yeah.
And it really ties into Kiyosaki's emphasis on thinking differently about money, doesn't it?
Yeah.
He's constantly encouraging us to question those ingrained beliefs about wealth and success.
Absolutely.
Yeah. And this leads us to another crucial aspect of Kiyosaki's work, the importance of mindset.
Yes.
Okay, let's unpack this idea of mindset.
Sure.
Because it seems to be a recurring theme in personal finance and success in general. What exactly does Kiyosaki mean by having the right mindset for financial freedom?
He believes that your beliefs about money,
Okay.
your attitude towards wealth,
Okay.
and your emotional responses to financial challenges play a huge role in your ability to achieve financial success.
Okay.
He even has a model for this. Remember the be, do, have model?
Liz, it suggests you need to be the kind of person who can attract wealth before you can do the things that lead to wealth and ultimately have the financial abundance you desire.
Exactly. It's like training for a marathon. You wouldn't just show up and expect to run 26 miles without any preparation, right?
Yeah.
You need to build up your endurance, train your body, and develop the mental fortitude to push through those difficult moments.
So financial freedom is like a marathon, not a sprint.
Precisely. It requires patience, discipline, and a willingness to embrace challenges as opportunities for growth.
So it's not just about knowing the technical aspects of investing or business, but also about cultivating the right mindset, the belief that you can achieve financial freedom, and the resilience to overcome obstacles along the way.
Absolutely.
Yeah.
Kiyosaki argues that without the right mindset, even the best financial strategies can fall flat.
That makes a lot of sense.
Yeah.
So we've covered the cash flow quadrant, the 5 levels of investors, and the crucial 6th level, becoming your own bank, along with the importance of financial intelligence and mindset.
Yes.
But this is a lot to take in. What are some actionable things listeners can do right now to start their journey towards financial freedom?
Start by understanding where you are right now. Look at your current income streams and ask yourself, which quadrant am I in?
Okay.
And where do I want to be in the next 5 years?
So it's about self-assessment, getting clear on your current financial situation and your long-term goals.
Yes.
What else?
Start tracking your cash flow.
Okay.
Where's your money going each month? Could you redirect some of those expenses towards building assets? Even small changes can make a big difference over time.
And I think it's crucial to dedicate some time each week to learning about investing and personal finance. Even just 30 minutes can make a difference.
Absolutely.
There are so many resources available online, books, podcasts, courses. It's never been easier to educate yourself.
Absolutely. Remember, the most valuable investment you can make is in your own financial education. The more you know, the more empowered you become to make smart decisions and build a secure financial future.
This has been incredibly insightful. But there's so much more to explore in Kiyosaki's work, especially when it comes to those actionable steps towards financial freedom.
You're absolutely right. There's so much more to dive into.
Yeah.
One of the things that really resonated with me in that YouTube video you shared was Kiyosaki's emphasis on owning systems.
Okay.
Not just jobs.
Yeah.
He talks about moving from the S quadrant, that's self-employed hustle, right,
to the B quadrant, where you're a true business owner.
It's like the difference between owning a job and owning a business, right?
Exactly.
In the S quadrant, you're still trading time for money.
Yes.
Even if you're your own boss. But in the B quadrant, you've created something that can generate income even without your constant involvement.
Exactly. Think of it as building that pipeline instead of hauling buckets.
Right.
You're leveraging other people's time and skills to create a sustainable income stream.
And Kiyosaki talks about different types of business systems, right?
He does.
Like traditional corporations, franchises, and network marketing.
He does. And he points out that each system has its own advantages and disadvantages.
Yeah.
Traditional corporations offer more control.
Right.
but require significant upfront investment and effort to build from scratch.
Yeah.
Franchises provide a proven system,
Right.
but you're bound by the franchisor's rules and fees.
Okay.
And network marketing, while potentially lucrative, often requires strong sales and interpersonal skills. So it seems like choosing the right system depends on your individual strengths, risk tolerance, and of course your financial goals.
Mhm.
But the key takeaway is to have that system in place.
Yeah.
It's about building that engine for generating income without trading your precious time for every dollar.
Couldn't agree more. And once that system is in place, you can focus on another key aspect of financial freedom.
Investing.
Ah, yes, investing. But where do you even begin?
Right.
There are so many different asset classes, strategies, and frankly, it can feel pretty intimidating.
You're not alone in feeling that way.
Yeah.
A lot of people get overwhelmed by the sheer volume of information out there.
Right.
Kiyosaki breaks down investing into understanding a few key asset classes.
Okay.
Businesses, real estate, paper assets like stocks and bonds,
Yeah.
and commodities like gold and silver.
And each of these has its own set of risks and rewards, right?
Absolutely. And that's why diversification is so important. It's about spreading your investments across different asset classes to minimize risk.
Diversification.
It's a word we hear all the time in the investing world. But I remember Kiyosaki actually having a slightly different take on this.
Yes, he, along with other successful investors like Warren Buffett, advocate for focused investing.
Okay.
They believe deeply understanding a few investments is better than superficially dabbling in many.
So it's not just about spreading your money around, but about concentrating on investments you truly understand and believe in.
Exactly. It's about becoming an expert in your chosen asset class,
Okay.
conducting thorough due diligence and not blindly following the crowd or so-called experts.
Yeah.
Think of it like specializing in a field of medicine.
Okay.
You wouldn't go to a general practitioner for brain surgery, would you?
No, you'd seek out a neurosurgeon, an expert in that specific area.
Exactly.
So it's about applying that same logic to investing, finding your niche and becoming really knowledgeable in that area.
Precisely. And that requires continuous learning, constantly updating your knowledge and skills to stay ahead of the curve. Now, one of the biggest fears people have about investing, and understandably so, is risk.
Oh, absolutely. I mean, we've all heard those stories about market crashes, people losing their life savings.
Right.
It can be paralyzing.
It can, but Kiyosaki argues that it's not investing itself. That's risky.
Okay.
But a lack of financial education and understanding.
Okay.
He suggests that blind faith in so-called experts,
Yeah.
following the herd mentality and making emotional decisions are far riskier than investing itself.
So it's about taking control of your financial destiny, not relying on others to make decisions for you.
Exactly. And it's about viewing risk not as something to avoid, but as something to manage, understand, and potentially even use to your advantage.
Okay.
Think of it like learning to surf.
Okay.
At first, the waves seem big and scary,
Right.
but as you learn the techniques, understand the currents, and practice your skills, you become more confident and the risk diminishes.
That's a fantastic analogy.
Thanks.
You know, it's interesting that Kiyosaki also challenges conventional thinking about debt. He actually views it as a tool the wealthy use to their advantage.
He does. He says that understanding debt and using it strategically is a hallmark of the wealthy.
Okay.
It's about becoming the lender, not just the borrower.
Like we talked about earlier with becoming your own bank.
Exactly. It's about shifting your mindset from being a slave to debt to becoming its master.
Oh, yeah.
It's about understanding how to use debt to acquire assets that generate income, ultimately creating a positive cash flow cycle that builds wealth.
That reminds me of a point made in the video about a strategy Kiyosaki calls being the bank, not the banker, which sounds quite intriguing.
That's where things get really interesting.
Yeah.
This concept challenges us to rethink our relationship with traditional financial institutions.
So it's not about getting a job at a bank, but understanding how banks operate and then applying that knowledge to your own financial decisions.
Precisely, it's about learning to create and control your own financial systems rather than being dependent on the existing ones.
That sounds powerful, but also a bit complex. What are some tangible ways someone could start being the bank?
It's less about secrecy and more about education.
Okay.
Kiyosaki suggests understanding financial instruments like mortgages, real estate, and investment strategies that allow you to essentially lend money and generate interest income, much like a bank does.
So it's like becoming your own mini financial institution, lending money for investments and generating passive income through interest.
Exactly, and it's about understanding the tax advantages that come with different investment strategies, something Kiyosaki emphasizes throughout his work. It's about playing the money game, strategically understanding the rules, and using them to your benefit.
Speaking of playing the money game,
Uh-huh.
one of the things Kiyosaki highlights is the importance of real estate in building wealth.
Uh-huh.
Why does he favor real estate over other asset classes?
He argues that real estate, unlike many paper assets, is a tangible asset that can generate both cash flow and appreciation. It's like having a physical piece of the pie, something you can see, touch, and control.
And he also emphasizes using debt, leveraging other people's money to acquire income-producing real estate, right?
He does. It's about building that portfolio of rental properties, generating passive income, and watching those assets appreciate over time. But of course, as with any investment strategy, thorough due diligence, understanding market trends, and careful financial planning are essential.
Right. It's not about blindly buying any piece of property, but strategically choosing investments that align with your financial goals and risk tolerance.
Absolutely. One of the most compelling aspects of Kiyosaki's work is this idea of challenging conventional wisdom. He
Yeah.
really encourages us to think differently about money, work, and success.
He definitely doesn't shy away from questioning the status quo.
Not at all. He challenges the idea that a safe, secure job is the ultimate path to financial security. He urges us to develop our entrepreneurial mindset and to seek financial freedom through owning systems and building assets.
He's a champion for thinking outside the box and breaking free from those limiting beliefs that keep us trapped in the rat race.
And he stresses the importance of continuous learning, seeking financial education outside the traditional school system.
Yeah.
It's about becoming a lifelong student of money, constantly expanding your knowledge and skills to navigate the ever-changing financial landscape.
That's so important. But as we've been discussing Kiyosaki's ideas, it's crucial to remember that his work is meant to be a starting point, a catalyst for your own financial journey.
Exactly. It's not about blindly following his every word,
Right?
but about using his framework as a lens to examine your own beliefs, goals, and strategies.
And that's what makes this deep dive so valuable.
Uh-huh.
We're taking these concepts and figuring out what they mean for you, the listener, in your specific circumstances. But we still have so much to unpack. It's one thing to understand these big picture ideas, like the cash flow quadrant
Right.
and the different levels of investors.
Yeah.
But it's another thing entirely to actually put those ideas into action.
It is.
Where do you even begin to translate this theory into, real world results?
That's the key question, isn't it? Bridging that gap
Yeah.
between theory and action.
Right.
And this is where Kiyosaki's emphasis on financial education really comes into play.
Okay.
He's a huge advocate for not just reading books,
Yeah.
but getting out there and
Yeah.
actually doing deals,
Yeah.
making investments,
Right.
and learning from experience.
It's like he's saying, okay, you've studied the playbook.
Yeah,
Now it's time to get on the field and play the game.
exactly. He calls this real-life education.
Okay.
It's about moving beyond the textbooks and seminars
Yeah.
and putting your knowledge to the test
Oh.
in the marketplace.
But that can feel intimidating, right?
Of course.
Especially if you're just starting out.
It's completely natural to feel a bit apprehensive when you're stepping outside your comfort zone.
Yeah.
That's why Kiyosaki suggests starting small, finding a mentor,
Okay.
and gradually building your experience and confidence.
It's like learning to ride a bike. You wouldn't expect to hop on a Tour de France bicycle and race right away, would you?
Not unless you're feeling exceptionally brave.
Right.
You start with training wheels, maybe a few falls,
Yeah.
and gradually build your skills and stamina.
Right.
Investing is similar.
Okay.
You don't need to make $1 million overnight.
Right.
It's about taking those incremental steps, learning from your mistakes,
Yeah.
and gradually building your financial foundation.
So it's more about focusing on progress, not perfection,
Exactly.
and celebrating those small wins along the way.
Exactly. Now, one thing that I think holds a lot of people back from taking action
Yeah.
is the fear of failure.
Oh, yeah.
They're so worried about making a mistake, losing money,
Right.
that they never even try.
That fear is understandable.
It is.
But as you said earlier, it can be paralyzing.
It can, but Kiyosaki reminds us that all successful investors and entrepreneurs have made mistakes.
Yeah.
They've all experienced setbacks.
Right.
The difference is their resilience, their ability to learn from those experiences and keep moving forward.
It's about having that growth mindset, believing you can learn and adapt and overcome challenges.
Absolutely. And along with taking action, Kiyosaki also emphasizes the importance of finding mentors,
Yeah.
people who have already achieved what you aspire to.
Right.
He believes that learning from those who've walked the path before you can significantly accelerate your journey
Mm.
and help you avoid costly mistakes.
It's like having a guide in a new city, right?
Precisely.
They can show you the shortcuts, warn you about the pitfalls,
Yeah.
and help you navigate the unfamiliar terrain.
Precisely, a good mentor can provide invaluable insights,
Yeah.
support and accountability, helping you stay on track and achieve your goals faster.
So as we wrap up our deep dive into Rich Dad's cash flow quadrant, what's the one key message you hope listeners will take away from this conversation?
I think the most important takeaway is that financial freedom is attainable
Yeah,
for anyone.
right.
It's not about luck or privilege, but about having the right mindset, education, and system in place.
Okay.
It's about taking control of your financial future one step at a time.
That's so empowering.
It is.
It's not about some magic formula,
Right.
but about taking ownership of your financial journey
Yes,
and making conscious choices that align with your goals.
exactly. And remember, the journey itself, the process of learning and growing, is just as rewarding as the destination.
This has been an incredible deep dive.
It has.
Thank you so much for breaking down these concepts and sharing your insights.
It's been my pleasure. I hope this deep dive has sparked some new ideas and inspired you to take action toward achieving your own financial freedom. Remember, the most valuable investment you can make is in yourself and your financial education.
So to our listener, we leave you with this final question to ponder: what kind of investor do you want to be? The choice is yours, and remember, the path to financial freedom may not be easy, but it's absolutely worth it. Go out there and build those pipelines of income. Thanks for joining us on the deep dive.